Now, the big Buffet, Warren Buffett's in the news because his company, Berkshire Hathaway, its share price just hit a record high as investors cheer strong earnings in a cash fortress. So their earnings, their operating income, I believe, was up a little less than 7%, which is a very strong number for Berkshire Hathaway. Berkshire Hathaway shares rallied to a record high Monday following a strong quarterly report that showed a rebound in insurance operations as well as a massive cash hoard that swelled to nearly $150 billion. Berkshire's Class A shares climbed 4.1% to a high of $555,000 plus. The public count is a little under $2 million, so I couldn't even afford to buy 4 shares of Berkshire Hathaway Class A shares in the public account. Like, that's crazy if I dump down of all my other stocks. Like, that's nuts to think, right? The Class B shares, which are basically just a fraction of the Class A shares, those ones hit a new all-time high of $364 here, right? Now, this is fascinating. Elevated interest rates are now enabling Berkshire to earn a hefty return from its cash. The conglomerate held more than $97 billion in short-term treasury bills. Buffett previously revealed that he had been buying $10 billion worth of 3-month and 6-month treasury bills every Monday, which is insane to think, right? So this is why, a man like Buffett is definitely just a financial genius, right? And sometimes in the short term, he can look not smart. Sometimes people make fun of him, all these sorts of things, right? Man knows what he's doing. And he's always watching risk-reward profiles. He's never going to take too much risk. If anything, he's going to play it a little safer. And, for a long time, if you had a lot of cash on your balance sheet, you kind of got laughed at as like, what are you doing with all that money, right? Well, here Buffett is with all his cash. And here we are with the best treasury rates you could get in the past 20 plus years. And here you have a situation where Buffett's getting, his company, Berkshire Hathaway, is getting $5 billion plus of easy money a year now at this point in time for no risk, just buying treasuries. Imagine making like literally he can make $5 billion plus a year for doing nothing and just having the money in treasuries right now. Now here's the most brilliant part of this. Okay, here's the most brilliant part. If the Fed keeps raising, T-bills are going to keep going higher, which means it's going to be able to make even more money. Now let's say a situation happens where the economy starts to falter, unemployment starts to go up in 24, and we start to have a messy, sticky situation when it comes to the economy. What is the Federal Reserve going to do? The Federal Reserve will then start cutting rates. Now you might say, okay, that's when Berkshire Hathaway screwed at that point in time, right? Because if the Fed cuts rates, if treasuries start going down, well, then they can't make all this easy money. Well, what is going to be happening at a time period if unemployment's starting to skyrocket, starting to fly up, right? Company earnings are all of a sudden tanking. The Fed's cutting rates. What always happens as the Fed's cutting rates? Stock market's tanking. Oh, he can go ahead and flip out of these 3-month, 6-month treasuries that he's getting these insane yields on and go ahead and buy the dip in countless stocks for 20, 30, 40, 50% discounts, right? Absolutely beautifully hedged play by Mr. Warren Buffett. Okay, not a lot of people will even see what's going on there, but it's beautiful, man. It's absolutely beautiful. There's a reason that man's had as much success he's had in his lifetime. I can tell you that. I've been reading this book. I picked this book up from Barnes & Noble. Barnes & Noble, where the manager, she dresses like, she just came out of a set of Harry Potter. Yeah, that's the store, okay? So I bought this book, a few nights ago. I haven't been able to put it down since. Great book. And, yeah, man, absolutely brilliant. Absolute holy smokes, this was no joke. It was after hours. So the earnings come out within a minute or 2 minutes, like within 60 to 90 seconds after those earnings came out, the stock just plummeted. I mean, it plummeted on extremely heavy volume. I don't know the machines, the algos, if it was an individual that, basically had entered in something like if they don't beat earnings or if they just come in line, then sell the stock heavy. But literally within 60 to 90 seconds of that earnings coming out, the stock tanked off a cliff and it fell, into the 15s, right? Which is where I told you guys if the earnings were, bad, we would be, in the 15s. That's exactly what I called out, right? And then after that, things just kind of ticked up from there. Volume kept coming in. The buyer stepped in, and the buyer stepped in, and the buyer stepped in. And ultimately, there was that initial wave of selling that might have been more short-term type traders that were, because there's a lot of people that were like, if they come in, kill these earnings, their stock's going to fly to, $25, $30. There's probably a lot of people that, in their algos basically had it set up where if the earnings didn't come in with a beat, and if those headlines said in line or something around there, and the revenue number came in at a certain number, just automatic sell, because they were probably fearful that maybe the stock goes down to $15, $14, $13, $12, and they didn't want that, right? They kind of unfortunately played themselves, because we ultimately know what ended up happening with the stock price after hours, right? And as of right now, at least, the stock is green. Now, in terms of myself personally, what did I go into these? And by the way, I think I got to discuss this, okay? Am I surprised by that stock price move after hours? Okay. The answer is no, absolutely not. And if you follow me on Threads, initially the earnings came out, and I think it was like Stock Twits or something. I'd even responded to it. I said, don't be surprised. I wouldn't be surprised if Palantir ends green. And sure enough, that ended up obviously happening. When it comes to a stock like Palantir, this is a whole different animal. You're not dealing with a normal stock. Okay. This reminds me so much of Tesla 2019. A lot of people think like the normal rules that apply for certain other stocks apply for a stock like Palantir. They just don't. This is its own game. It's going to run its own race. It's going to do its own thing, very much like Tesla in 2019 was, before a lot of people had discovered that one, right? And some of us, like myself and some of you guys, made obviously life-changing money on Tesla. But yeah, that move after hours, it doesn't surprise me at all. That's Palantir. That's the type of stock this is, okay? So I went into these earnings with 5,500 shares in the public account overall, right? Now, it's interesting. Palantir is the top story on CNBC. The top story. Yeah, it took the leadership. There was a lot of companies that reported earnings after the bell, including some huge movers like Chegg was an insane mover, right? And yet Palantir takes top story, which just goes to show you the level of relevance that Palantir is starting to get to, that this company reports earnings and it's the top story on CNBC. So that's very telling for where Palantir's at in its life cycle. And I mean, this is on the same day that the Tesla CFO stepped down. I mean, there's not like there was not that many big stories. There was a lot of big stories that came out today, and including after hours, right? So first, let's go through how kind of like, CNBC's pitching this and what they're saying, and then we'll go into the kind of the nitty gritty, okay? Palantir reports 13% revenue growth, issues guidance that tops estimates. Palantir's third quarter forecast exceeded estimates, implying an acceleration in revenue growth. The data analytics company bumped up its full-year guidance for adjusted income from operations. During the quarter, Palantir announced a contract from the U.S. Special Operations Command. Palantir reported a 13% increase in second quarter revenue on Monday and issued forecasts that topped analysts' expectations. And obviously, we know the stock came back, right? So as far as this past quarter, EPS came in at 5 cents. So in terms of my opinion on EPS, if you guys got to see my, kind of my breakdown of what I was expecting for the company, I had a question mark next to EPS, and including not only this quarter, but next quarter and kind of full year. I'm, very divided on what EPS is going to come in. I don't have strong opinions on EPS and, whether this was going to beat or miss in terms of the earnings per share story, okay? Now, the revenue story is a very different animal, because I did have a pretty strong opinion, okay, on revenue. So revenue came in at $533 million. $533 million was what was expected by analysts on average, okay? Now, how do I feel about that right there? I feel not good about that. This is definitely not a number I wanted to see. Very disappointed. I was expecting them to come in with some sort of revenue beat, at least something. To just come in line was very disappointing to me. Extremely disappointing. What that tells me is that the sales cycle for Palantir is taking quite a long time, because obviously Carp over the past many, many months has said all these customers are talking to them and, engaging with Palantir and all these sorts of things. But to not see it come through in the numbers in a significant way was pretty disappointing. That does not mean future quarters are going to be bad, because we'll talk about the guidance and those sorts of things in just a moment. But it just shows that, this has taken a while to actually get the sales through and actually start running the revenue and actually get all these customers online in those sorts of things. So that was kind of disappointing for me to see just an inline number there. I mean, they didn't have to kill it. Just like, 537 versus 533, something like that would have been nice. No, Palantir reported $28 million or 1 cent per share in net income, compared with a net loss of $179 million or 9 cents a share in a year ago quarter. The data analytics company said third quarter revenue will likely be between $553 million and $557, ahead of the $552 expected by analysts. The midpoint of the guidance implies 16% growth in a sequential acceleration after 3 years of gradual deceleration. So that's good. Growth is actually finally expected to accelerate again. Okay. Management reiterated expectations for net income in the third and fourth quarters and called for full-year revenue of $2.212 billion. That's a very specific number. And a midpoint, above the midpoint for its forecast from May. Analysts polled had around the same, okay? Now, how do we feel about this number right here, okay? Once again, disappointment. We're talking about a midpoint of 555 versus 552. It's $3 million. That's like nothing. So once again, this obviously shows that the sales cycle is taking a long time for Palantir. So as a shareholder of the company, I am not thrilled with that. I feel like there's no reason why this company shouldn't be growing 20% plus next quarter. 16% growth, okay. We'll deal with it, but I'm not thrilled with that. I'm hoping they're sandbagging. That's my hope, because that's not that impressive. We anticipate that we will become eligible for inclusion in the S&P 500 after we report our financial results Q3 2023 in early November. CEO Alex Karp wrote in a letter to shareholders. At that point, we will have been profitable over a cumulative basis over the preceding 4 quarters. So, S&P 500 inclusion now at this point in time is almost a sealed deal. I mean, it's pretty darn close now at this point in time. If this was a football game, we'd be leading 40-0 going into the fourth quarter. It's looking pretty darn good. And obviously that's good for the stock price, right? Because you're going to continue to have people buy up the stock as you get closer to that S&P 500 inclusion. And obviously once you get into the S&P 500, that's a huge bullish thing, because a lot of funds are forced to buy your stock. Palantir lifted its forecast for adjusted income from operations for year to over $576 million, compared with a range of $506 to $556 as of May. That's really good news. This was very surprising. This was very surprising to the upside. So as disappointed as I was in this past quarter's revenue and the guidance, I am very happy with this here as far as adjusted income. That's strength, okay? That's a huge uptick there. Look at this. The company said its board has approved a buyback program for the first time with a capacity of up to $1 billion. Company has no debt on the balance sheet. They have $3 billion plus of cash. At the end of the day, if you really believe this company's going to where you think this company's going, which is a $100 billion market cap or several $100 billion market capitalization, it's better to buy as many shares as you can get your hands on when the market cap's 30 or 40 billion versus 300 billion or 400 billion if you think it's going there someday, right? And so I think that's a great move for Karp and the team to go ahead and decide to do that now in the board of directors. And I definitely am very happy about that. I approve that personally. Great.